Good morning, everybody. Welcome to the morning show here on Stock Market TV. Feels like a S&P 5,000 kind of a day, maybe. Actually, already, if you look at the futures. So we'll talk about that, I'm sure. Tommy Lackey is our guest today. He has a lot of great relative strength charts for us. He'll be on at 9. Sean McLaughlin will be on at 9:30. Got a lot of earnings to discuss. We'll hit on Disney. We'll hit on ARM. We'll hit on PayPal. And I'm sure JC has to tell us all about his trip to Baltimore yesterday. So that's the drill, or that's the rundown. You know the drill. Smash the like. Here we go.
Oh, yeah. We are back. Can I tell you, I don't think there's anybody in this world that likes Baltimore as much as I do.
The total falsehood. I know several people who love Baltimore way more than you do.
Every time I'm in Baltimore, I'm eating good. I'm hanging out with good people. Somehow I'm there on nice days all the time. What a beautiful day to be walking around Baltimore yesterday. Oh, man.
What did you eat?
Dude, the Charleston. Can't believe as many times I've been to Baltimore, I've never been to the Charleston.
Talk to me about this food. I already looked at the menu.
It's French cuisine. I know yesterday you were just describing how you don't like French cuisine because you're some kind of serial killer or something. I don't know who doesn't like French cuisine. It was awesome. The wine list was fantastic. I've never seen a Madeira list like this one.
A what now?
Madeira is a fortified wine.
Okay.
Yeah, Madeira. It's a fortified wine. I've never seen so many Madeiras on a menu in my life, and I've looked at a lot of menus, and I look at a lot of wine lists. I've never seen a Madeira list like this. I was very impressive with the wine selection. Their sommelier was lovely. He was bringing me stuff on the house. See, that's the thing. Once you get in with the som, then they start flexing. They're like, "Oh, I got something in the back for you." You know what I'm saying? They start flexing. You've witnessed some of that over the years.
So, at what part of the dinner did you stop eating with Brett and start having your date with the sommelier? Like how far did you get?
About halfway. He left, I stayed.
Okay, got it.
Yeah. He bounced and I stayed, and I was like, I'm just gonna hang out here. I'm having a great time. They kept bringing me more stuff. I could have been there all night. What a great place. Just hanging out at the bar. It's great.
So you
highly recommend it. The Charleston.
As a little escargot, a little caviar.
I had some caviar, no escargot, had shrimp and grits. Dude.
Oh no, really?
So that's what I said. Holy shit, they were so good.
Because it's like a South Carolina styled restaurant in Baltimore.
Yes, it is. That's exactly right. Shrimp and grits. I had some lobster soup, but it wasn't like a bisque like the Northeast. It was more soupy. Oh, fantastic. All right, let's go. Big day in the markets yesterday. Let's go. Hit it. All right, guys, let's do a quick little rundown on the futures. Dow futures down exactly 1 point. The S&P futures down about 15 basis points, about 8 handles. Qs, NASDAQ 100 down about 20 basis points. Bond futures down again 70 basis points as stocks and bonds continue to move together. Silver pretty much flat. Copper down almost 1%. Gold down 0.5%. Crude oil up 1.5%, which is really interesting, seeing that defensive rotation into energy. And, a dollar slightly mixed, but mostly up on the day. Volatility index back above 13. U.S. 10-year yield pushing 4.2%. Bonds are getting hit. I think that's what stands out the most to me over in crypto land. You've got Bitcoin up almost 1%, right around 44,700. You got Ethereum this morning down about 30 basis points, just over 2,400. And then, of course, you got the old Solana back above 100, sitting right around 102, up about a stick. Total crypto market cap hanging out right around 1.66 trillion. So big day in the markets yesterday. New all-time highs for the S&P 500, the NASDAQ 100, and the Dow Jones Industrial Average. You want to throw slide 3 up there, Spencer. And I didn't think this was possible. I really didn't think it was possible that somehow, despite a new all-time high for the Dow, S&P, and the NASDAQ, highest ever. Somehow, there were fewer stocks in the New York Stock Exchange that made a new high versus last week. Like, how is that even possible? They managed to get it done. Handful of names driving this index. The rug pull, I think, is imminent here. I love this bond selling off. I think the bond market is right. I think the dollar's right. And stocks are about to play a little catch down, I think. What do you think about that, Strazza? What'd I miss?
How about those transportation stocks?
How about industrials in general, first of all, not just in the United States, but globally?
Yep.
Those are the generals. So yesterday you missed a meeting, Strazza.
Yeah, I did. What a wow.
Yeah, you missed a meeting yesterday.
Strazza
one of the things.
Yeah.
One of the things that I was saying.
He was shocked. He was shocked, I think.
Tell him what I
said.
said.
I was saying in the meeting. One of the things I was saying in the meeting. I want to hear your thoughts.
Yeah. Do you?
Despite the largest components being technology, obviously, in the Magnificent Seven and all that stuff, like we get that. But I think the generals of this market, because of their broad-based exposure and diversified sector group, I think industrials are the generals of this market. No? How do you feel about that, Strazza?
Couldn't agree more. Fonz is actually working on a post right now where we're going to make that point and use the large cap industrials index, the mid cap industrials index, the small cap industrials index, and all of the subgroups, most of which are already broken out above their prior cycle highs, to make that point that in terms of internals, both down the cap scale and across all the different subgroups, industrials are by far the best group, and actually have been, right? Because we haven't been able to say that about tech.
And small cap industrials, let's remember, peaked in late December, the same day that the dollar bottomed. So even though industrials are the generals, I think we're all agreeing on that, and industrials made new all-time highs yesterday, small cap industrials suck just as much as the other small caps. So that is an interesting tidbit there.
So I miss one team meeting, and we're out here shorting the strongest industry groups in the market. What happened yesterday? Like, how did we get there?
Let's not give it all away. Yeah, we'll talk about it when Sean gets here. Shorting home builders, shorting coal stocks, doing some work to put on some energy longs. Not a lot there, but we're doing some work. Yeah. So what's interesting is that our shorts are working in the individual names. Obviously not at the index level, but the individual name shorts are working. So we started adding to those.
Sure. What are they?
Yeah, I don't want to mention any ticker symbols, but yeah, the agriculture, the retailer, yeah,
not in them, so I don't know.
Yeah, they're going down.
I'm not involved.
I know. So that's what I see yesterday. I'm seeing a lot of people trolling me on Twitter, which is obviously hilarious. Generally, I don't get trolled when everybody agrees with me. You see, it's generally I get trolled when people very much disagree with me. And in my experience, since I've been, out there live tweeting and sharing ideas for 15 years, I find that when I get the most pushback, that's usually when I'm on to something. So I guess
you do tend to like it. You do tend to like it, I've noticed.
Yeah, of course I like it. I'd rather people disagree with me, because if everybody agrees with me, then I'm probably going to be wrong, right?
Yeah.
So of course I like it. Yeah, I'd rather everybody disagree. Like I'm getting yesterday. People,
But I think we do need to make a list and be responsible about this, right? Because a lot of the reasons for turning bearish are no longer reasons to be bearish, right? So I think we
like fewer stocks going up. We're getting somehow even fewer.
Of course, there's a breadth divergence, right?
And the dollar strength. The dollar keeps getting stronger, not weaker.
So
the bond market keeps getting weaker, not stronger.
Hold on. So low vol, new relative lows.
Yep.
Staples, new relative lows. Credit spreads are fine, right? High yields moving higher.
Staples are not making new relative lows. I'm not sure where you got your data.
Staples?
Yeah, they're not making new relative lows.
So I guess right here today, you're talking about the candle from January 24th. Bottom line is it's below your risk level. your original listing,
Still
right?
putting in higher lows. Also, low volatility relative to high beta. Still, again, also putting in higher lows, not putting in lower lows, not confirming the new highs in the indexes at all. At
Uh,
all.
Dude, look at low volatility relative to the S&P. What do you mean?
Well, your denominator fallacy there is hilarious. Compare low volatility to high beta.
Yeah, they're going to move in the same direction, aren't they?
Yeah.
Yeah. Okay. So maybe that's just something. Maybe that's just
Let me ask you this. So
yeah.
the correlation between stocks and bonds has been tight, man. Like tight.
Hmm.
So bonds are getting the crap kicked out of them.
So bonds look more like small caps than large caps, though, right? The correlation's still there with small caps. If you use the large cap indexes, you could almost say they've been moving in opposite directions this
If
year.
you look at just the indexes, but if you look at the components, then they look exactly the same.
Well, I would agree that you should be using small caps or the value line, something that represents most stocks when you're doing this. And yeah, the correlation's still there with those indexes.
Yeah, and the breadth obviously is an agreement. So with that being said, do you think that there's any chance at all that the correlation between stocks and bonds that has been so positive for quite some time now changes? You think that changes anytime soon?
No,
The bet is correlation remains in place between stocks and bonds. That's the bet.
I think so. Yeah,
So
I'm sitting here.
if stocks are gonna go up from here,
Bonds
even though
should too.
most of them have been declining for a couple of months already, but let's just say all of a sudden today, everything completely changes and turns around, and now all of a sudden, completely out of nowhere, more stocks start going up. Let's just say, in that scenario, bonds would have to be going up too, correct?
Bonds could be going sideways,
Okay. Yep. Sideways
right?
rates, good for stocks, right?
Just not down, I think.
So rates going up, bad for stocks.
Yeah, I think so.
So
It's been
bonds
the
get the
case.
crap kicked out of them like they're getting the crap kicked out of them today. Not good for stocks.
Listen,
I'm
again.
asking you. I don't know the answers. I'm asking you.
Yeah, I think so. I would think so. But I'm not on board with this whole like stocks aren't going up story.
All right. Well, when we get done with the show, you can go count all the stocks in the New York Stock Exchange, and you tell me that more stocks were going up yesterday than last week. I did the counting this morning, as a matter of fact, at 4 o'clock in the morning. That's what I do in the middle of the night.
But
Before I got in the car and drove back from Baltimore, I counted the
you don't have
stocks
to
in the New
count.
York Stock
You
Exchange.
don't have to count. They posted like on WSJ and other websites.
What is
You
a
don't have to
WSJ?
It's a place that people go.
Ugh.
Oh, the Wall Street Journal. Sorry.
The
Sorry.
the
Is that what the
market
kids
app,
call it
dude.
these days? WSJ? That's like how
It's not new.
is that like LOL?
It's
Nope.
exactly like that, actually. Wait, but okay, so fair to say that both of these things can't be true forever, right?
Which things?
I'm telling you, breadth weakening and the index is making new all-time highs. That can't.
I don't know.
Let me tell you the smartest thing that your boy Strazza has said this week. Right? And it's easy to find because there's not a lot of smart stuff. But this one in particular, he nailed it.
Mm.
While we have seen fewer and fewer stocks going up,
Yeah, there's no.
we have yet to see a dramatic expansion of stocks going down.
Like
Right? Like we've seen slightly a little bit, like a little tail, but like not enough to be like, okay, now we're getting an expansion of new lows. We have not gotten that.
we're barely in the double digits across the board
Double digits of what?
for any of these new low indicators. You're barely in the double digits.
Yeah, 52-week lows.
Talking about 10%.
Yeah. I'm not looking at the new 52-week lows list at
No,
all.
but even
We're not
the
going to be. No, I'm
one-monthers.
telling Spencer, we're not going to be
Oh.
looking at the new 52-week
All
lows
right.
list anytime soon.
Okay.
Right? We got to work our way there. Bear markets will eventually get there, but it's got to start with the 1-month lows, 3-month lows, like baby
Okay.
steps.
Okay. Baby steps. Got
But
it.
like
Got it.
JC's saying, you need more than 10% of stocks making 1-month lows. Like you got to have something there. Otherwise, I think at a certain point, you got to err on the side of large caps and expect the rest of the market to play catch up and look for that breadth expansion.
Yeah.
Also, JC, we've been correcting within the context
Agreed?
of a primary uptrend
Yep.
since mid-December.
That's right.
Most stocks, right? They
Mhm.
don't look like the averages. So I think the longer and longer this goes, you have to start thinking, okay, at what point do we pick it back up and resume in the direction of the underlying trend.
We'll see it.
Yeah.
We'll see it.
So I think there's almost like a time stop on this tactical like correction wave too, right? Like
Sure. Yep. And
we'll
listen,
see.
at the end of the day, you know, the beauty of what we do is that we're data driven. So I really don't care. You know, I hope the Dow goes to 100,000. That'd be great. I'm all for it. I hope it goes to 0. That would be great too, right? Like either way, like I'm good.
Yeah.
So if we do get that breadth expansion, like I said before, completely out of nowhere with no evidence of it coming whatsoever,
Yeah.
that would be interesting. We'll see it. We haven't. We've only seen the opposite.
And the dollar is looking more and more to be on your side of things here. Right.
The zloty. I think you know, I know it's like a joke, JC, the zloty. The top on the zloty is pretty toppy. Tough to ignore the zloty there. So again, the zloty is one emerging market currency, but it is one emerging market currency that has been you know, a great indicator for us. Here, throw up slide 2 there, Spencer. You can see the zloty. I mean, you know, a lot of these quote unquote head and shoulders tops don't turn out to be tops. They're just continuation patterns within ongoing uptrends. We see that quite often. No evidence yet that this is one of those that is not going to complete, but to be fair, no evidence that it's completed either. So if you're looking for emerging market currencies to weaken, you've seen the Mexican peso, the real, things like that. The zloty is a clean one. Part of the reason we were so bullish in October was because of the zloty, as you guys who watch the show remember. So you know, what's the quote? Dance with the date that brung ya.
That's
right?
the quote.
That's the quote.
Yes,
it's a good one.
Where's that quote from, Spencer?
Oh gosh. To the Google machine.
Dance with the do you mind if we dance with your dates? What movie's that? Come on.
Blues Brothers.
No, that's Animal House.
Oh shoot. I'm sorry.
We
Oh
should
god.
be leaving. What a good idea.
That was oh man, that was bad. That was bad.
No,
Sorry.
but you got Belushi, right?
He did get Belushi.
All right,
He
I
did
got
get
half.
Belushi.
Oh gosh.
Try to guess what I am now.
JC,
Mhm.
two things for you. Two things.
Yes.
I don't know if we have any crypto charts. We don't need them though. Just open up your crypto account, take a look at what happened since yesterday. Does this concern you at all for the bear thing? The cryptos are working, taking out their short-term AV WAPs. These are looking less and less like tops and more like continuation patterns. That's, to me, it speaks to risk appetite, offense, investors positioning themselves for more risk, right?
Yeah, I mean, listen, they peaked last month. They're in the middle of that range. I don't think that's bearish. I'm not really seeing anything super bearish. Maybe the Bitcoin dominance is a little concerning. But you know, I think you put that within the context of the things you described. They're in the middle of the range they've been in over the last couple of months.
Yeah. Not breaking down.
They're not breaking down 100%. And by the way, just reiterating that 47,000 level, like this is happening there, right? Also, that you missed a meeting yesterday, an interesting point that Louis made is that 6 days prior to the new highs list peaking on the New York Stock Exchange and the NASDAQ, which was December the 14th, the new highs list in crypto peaked 6 days earlier. I thought that was interesting. Any thoughts there?
Yeah, we got to do better on this crypto breadth data. I'm pushing for it. I'm waiting for my universe, but I got to get in there. I don't have it. I don't have the data, so I don't know. I don't know what to tell you.
Do you find it interesting that the new highs list in crypto, top 150, peaked 6 days before equities? Does that make sense?
I haven't seen a chart.
All right. Charter, it didn't happen.
Right. Yeah. That's
another benefit of driving to Baltimore is that I'm halfway done with the book. Read, Write, Own.
Yeah.
By what's the gentleman's name again? What's his name?
I don't know. You said this on Friday.
Read, Write, Own. What's the name?
Yeah. I think that's the title. I don't know the author.
Chris Dixon. Chris Dixon. I'm halfway done with it. Honestly, it's awesome. It's really good. It's like a good refresher of like the start of the internet, like Web 1, Web 2. And then like I'm like in the middle of the book where it's getting more into like crypto and tokens. And while I know a lot of these things and I understand a lot of these things, at least so far in the book, because of just who our friends are and the conversations that we have. The way he explains it is really, really good. Like, you know how like the Morgan Housel book, like nothing he says in either one of his books are like these earth-shattering revelations. He just explains it better than anybody else. Same thing with like Yuval Navari or whatever. The
Yep.
the human book, what's that called?
Sapiens.
Sapiens. Again, he didn't like come up with any of this stuff. He just explains it better than anybody else. I
Well,
feel like this is like that, but like in the, it's nothing like super like new to me.
no.
But the way he explains it helps me understand it better.
Well, that's the content creator hack, right?
Yeah.
Like if you think of the people that we love just
Yeah.
here in our world, and I think we do a great job at it too. They break things down. They speak a language that resonates with people, that you can relate to and understand. Brian Shannon comes to mind. The way his book is written is very different from other
Yep.
technical analysis books, right? It just
Mhm.
it speaks to people, and that's why they like it so much.
Yeah.
Yeah, that's
Highly recommend it, guys. I'm halfway done with the book. The way I saw an interview with him recently, I forgot, I think he was on Bankless or one of these, and he was explaining how one of his goals in the book was to make it so that when new employees are hired at a tech company, like they're given that book to read, like almost like,
I love
okay,
that.
welcome to Google, read this book, like welcome to whatever tech company, read this book. Like that was his intention with it. And I could totally see it. Totally see it. Very cool. Very cool. Highly recommend.
You have like these generational books, like in finance in
Mhm.
particular, where like if you started working in the 80s, you read these. If you
Yeah.
started working in the 90s, you read these, right?
Yeah.
Started working
Yeah.
in the 2000s, you learned all about Enron and WorldCom and read those, right?
That's
Like,
right. That's right.
um, so
True.
that's pretty cool. If you get on that list, you win.
Yeah. All right. So I'll get on the list.
JC, can you reach out to Morgan? Get Morgan on the show.
Yes.
Cool. That'd
I
be
will.
great. I don't know Morgan Housel, but I've read his book and I'm a big fan.
So, so JC texted me about our friend. Let's get the Philippines chart up, Fonz.
Oh boy, what is this?
He said, JC said last night he wants to be the Nikki Yu of Baltimore. Nikki Yu is a great friend of ours from the Philippines. And I was thinking about her yesterday before you texted me her name, because, hey, these Philippine equities are waking up, man. So look at EPHE, big move yesterday, still some work to do. Love the overbought reading, bullish momentum regime. Take out that shelf of pivot highs from earlier last year. Japan needs help out in Asia. Japan can't just carry the whole region forever, right? The Southeast Asian countries, the emerging economies, really have been bad, right? Whether it's Thailand, Malaysia, Philippines, but they're looking perky right now.
Yeah,
The stocks,
that Philippine peso looks like shit though.
I love the C Limited. I love this SE. It's starting to move off the lower end of its range here. I like it. Grab, little movement from Grab. There's a base there.
I love how excited Strazza gets when talking about Southeast Asia.
It's great. It is great.
Look at him.
Yeah, almost as excited as I get talking about earnings. Speaking of which, we should do one before our guests. So
Please.
let's start with Disney here. All right, what are we up this morning now in Disney? We're only 7%. It was up more, I believe.
Spencer's making money today.
Money,
Hey,
money, money,
okay, so
money.
here are the facts. EPS beat estimates, $1.22 versus 99 cents. Sales came in a smidge lower, $23.5 billion versus a $23.6 billion estimate. They gave EPS guidance for the year, which they expect to grow by 20%, which was above the estimate there. A lot of other things here. A lot of other headlines. So they declared another cash dividend of 45 cents per share. That's a 50% increase from the last dividend they paid a month ago or a few weeks ago. They also announced a $3 billion share buyback program. Also, they are taking a $1.5 billion stake in Epic Games, the makers of Fortnite, which they're going to use conceivably to churn out TV shows or movies or something. I don't know, assuming those things. And on the individual segment front, Disney Plus lost 1.3 million subscribers last quarter, but they raised prices.
I was
So
one of them. I
so
canceled.
the ARPU, the average revenue per user, increased,
Yeah.
but the number of
Just
subscribers
call that the
decreased.
ARPU.
The
Yeah,
ARPU,
that's a thing. That's an
yeah,
acronym. That's like LOL too.
yeah.
Wow, ARPU. That's a new one.
WSJ, ARPU, it's all the same thing.
I'm gonna use
Uh,
it in a sentence in a conversation later today, and I'm gonna sound smart. Be like,
Ye
"Oh, that ARPU. You saw that?"
So anyway, the Disney Plus subscribers uh, going down sequentially quarter over quarter, not great there. But their direct to consumer unit, which includes Disney Plus and ESPN Plus, all this stuff, the losses there are shrinking. They've been pounding the table on this really since Bob Iger got back in the saddle, trying to turn that unit profitable, and they're again trending in the right direction. Still not profitable there, but trending in the right direction. Losses, only $138 million is what they lost on their direct to consumer stuff last quarter. They lost over $1 billion a year ago in the same quarter. So, losses shrinking, and the street loves buybacks and dividends, which is
Can
why the
I
stock. Yeah,
can I chime in on this one, please?
yeah, please.
So this is one of those names, Strazza, like a Tesla, like a Palantir, where there's like this inherent short squeeze of like people's hatred towards it. Like in this particular case, it's like the anti-woke community, right? Like the people that are just so angry about like woke things that they just can't get themselves to own Disney, you
You really
know?
think so though? With the name
Definitely,
this big?
dude.
Yeah.
100%.
I mean,
Yeah.
I get it. The narrative's there, but you would hope like a name as big as Disney doesn't
Nah,
fall
man.
victim to
These
that
these
shit.
anti-woke people are very, very stubborn.
Yeah.
Totally. Like these anti-woke people are like super hardcore. Like
Yeah.
they're like
That's
not
Budweiser.
drinking Bud Light.
Yeah.
Like these are people who've drank more Bud Lights than anybody in history, and they're no longer drinking it. Like they are, right? Like they boycotting Sports Illustrated or whatever. Like whatever. Disney's one of those because for a variety of reasons, so my understanding, but they're very upset about it. Stock is squeezing. You know how I feel. As soon as I got back from Disney in December, I was Mickey pilled, and I'm all in. Opened an account for my kids and bought them 1,000 shares of Disney. I mean that like $12 hot dogs, bro. They got a racket going on there, man, with these Disney princesses. So I'm in. Let's go.
So like 6 Costco hot dogs equals 1 Disney hot dog?
More, I think. No, yeah,
What are
more.
the Costco hot dogs?
I think it's $1.50.
Yeah, $1.50, I think.
Wow.
Yeah, wow. I'm telling you, dude, $12 hot dogs.
So 8.
Yeah. Is that the math?
Yeah.
My point is, as soon as I got back from Disney, I actually, while I was at Disney, I already formulated my plan. Like I'm telling you, they got a racket.
So what'd you do? You basically bought it for them against these lows, I think, for long-term investors.
Yeah, against 80. I mean, that was a good risk reward.
Yeah,
Remember, the bet was this is not a top, right? That was the bet, remember?
Yep. Listen, I like that. Yeah, I remember we were making fun of Spencer last year, but we were saying, hey, if we get down here towards 80, it starts to look interesting. Yeah, I like that.
Oh, see, Andrew says 100% on Disney and woke. I live in a small town, hear it all the time. I'm telling you, these hardcore anti-woke people, it's a built-in squeeze in the name, like a Palantir, probably worse.
Dude, Palantir, the follow-through on this earnings home run, so impressive the last 2 days here.
Yep.
Yeah, I mean, look,
new all-time highs is what Palantir is saying.
Look, as a long-term Disney shareholder, obviously I like the price action this morning, but my first reaction was, this is classic short-termism. The buyback, the dividend. Of course, the market's going to like that news, but not. They didn't say anything to me that like screamed, "Yes, we have a vision for the future. We are." I mean, maybe the Fortnite thing. I don't know, but
They don't have a plan. Even Nelson
so-
Peltz doesn't have a plan for them.
Oh, on that note, Bob Iger said he has no plans to speak with Nelson Peltz. So, yeah.
Can't these billionaires just get along? Jesus.
Nope. No, they cannot.
Yeah, I listened to the Snapchat call yesterday. Couldn't get halfway through. It was just such a disaster. I think.
What was it? You texted me about it, and for the record, Strazza never texted me about conference calls. Why was it so disastrous?
I was pissed, dude. Evan Spiegel is he's not a gamer like these other CEOs.
What did he used to do?
What do you mean?
He was always the Snapchat CEO?
Yeah, he's the founder.
Oh,
Yes.
wasn't he
So
dating one of these Victoria's Secret models?
I don't care who he dates. I
Wait,
don't pay
no,
attention. I
no,
have no
not
idea.
dating. He's married.
He married a Victoria's Secret model?
He's married to I think like Katy Perry is right or something like
He's a
that.
he's a nerd. So
Isn't he married?
so they're on the call, and other CEOs will say things like when they have a disappointing quarter, we're disappointed, we're going to do better, we're going to hit this. At one point, an analyst asked him why their growth rate just isn't, up to par with their competitors and their industry peers, right? Like why is your growth so underwhelming compared to everybody else? What are you guys doing wrong? And his answer, rather than being like, "You're right, we're going to get there, like that's our goal," was basically like, "We're all working as hard as we can over here." It was just like, oh my god, it was disgusting. I had to stop listening, but just no sense of urgency at all. Just kind of, he was out there acting like the quarter was good. Stock's down 30%, and he's sitting there like, "Oh, we're working as hard as we can." Not for me. You want like a killer running your company. He's not that. That's the first call I listened to. It was all hype this quarter. The stock was up 100%, expecting a huge earnings beat and some good news. They grew their active users, but the revenues just weren't there.
I want to give a shout out here to Rachel Lindzen. Remember, Rachel swung
I met
by in New
Rachel.
York.
Yeah.
She said sell. She said nobody. She's a kid. She's 26. So I'm like, she said sell it. She's like, I've been telling Dad to sell it.
That's hilarious.
Yup. So shout out Rachel. Good for you. Good for you.
All right, let's bring on Tommy Lackey here. He's got a lot of relative strength charts for us, and he's ready. So let's do it.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Tommy, what's going on?
Tommy.
I'm doing
What's
well.
up?
How about yourself?
All right. How's this market treating
Pretty
you?
good.
It's doing well. It's doing well. I think a lot of things changed end of last year, so I think there's a different perspective out there. I might have to push back a little bit on your bearish.
What changed at the end of last year? Let me ask you that. Let's get right into it. What changed at the end of last year, you think?
Well, I know you like to, it seems like, even though you are a charts and a data guy, it seems like you like to kind of perspect out a little further, just as far as, hey, here's an idea. If this happens, this could happen. And I have no problem with that. That's scenario play.
Yeah.
It's always good to be looking at a lot of different angles. But what I think happened the end of last year is I think after a 2-year, and I understand 2022 was when the NASDAQ came out, but I'm talking about from a little better breadth perspective. I think that's when we started seeing other things open up after everybody got real excited into summer of 23. And then that fall just took the wind out of everybody's sails. Sure. And we really were on the precipice of breaking down a really big shelf, especially on IWM, but also on the other markets. And then all of a sudden we get that fourth quarter reversal that happens so often in bear market bottoms. Now, can we say that for sure? No, but if you take out just the NASDAQ from 2022, late 2022 to 23, because of the large 7 or whatever, and you look at the markets from that perspective, and I do everything in equal weight for that reason, it shows you that after almost a 2-year bear market, because 2021 is really when the broader markets topped.
Yeah, for sure. February, things started getting weak in February, right?
Somewhere in there. So after 2 years roughly of a bear market, a little less, we finally started seeing multiple thrusts come in the market technicals, the market breadth numbers, all this, not just one, but lots of them.
A lot, like all of them.
And at a scenario to where when absolutely nobody thought it could happen. Everybody had given up in that third quarter. Not everybody, you know what I mean. But
we were buying stocks pretty aggressively in October.
And so there was a lot there, and a lot of people really wanted it to roll and were ready for it. And then things just launched. Those thrusts are not you and me buying. Those thrusts are institutionals finally coming off the sideline. And they're not going to do that for 3 or 4 months.
Tommy, can you, because I know what you're talking about. We speak the same language, but can you kind of share with the folks specifically what you mean by these breadth thrusts? Like, what are you describing exactly?
Well, there's the Zweig breadth thrust, there's the Whaley breadth thrust. There's a lot of different of the legends in our field that have kind of put together these, and they've worked for a long time. Not every time, but for a long time from a probability standpoint, which is all technicals really are. And so from that level, That's those breadth thrusts. But see, even in the work that I do on my side, I do a lot of breadth work, not just on the major universe, but all the way down through it. And so we saw a lot of things that were bottoming out at similar times. I used the breadth thrust indicator, which is kind of like a modified McClellan oscillator. So you can look at them all. It's basically a bound McClellan oscillator. So you can
What
look
is
at
it
them.
measuring? What is it measuring exactly?
It's basically measuring the advances declines. It's the summation. The McClellan summation is made up by the McClellan oscillator. And all the McClellan oscillator does, it's done by moving averages of breadth. And pretty much all the securities within a particular sector. I use sectors and subsectors, but most people just look at it on the New York Stock Exchange or the S&P or whatever.
Was that made up by Sherman McClellan or his wife? Because I know the wife was really, she was
The wife really did have a ton to do with it, from what everybody
right.
says, and they always do. They always do. So
just ask them, right?
Or just keeping us sane is enough, and keeping us from doing something really dumb.
That's right.
But there's a lot of breadth work. See, what I realized a long time ago when I started doing this is that breadth is an awesome tool, but when free technical software came out, most of them didn't have breadth. So it got pushed to the wayside from a quick momentum indicator or something like that. And if you use breadth right, because it just takes a little longer to deal with, but you can really see where money is flowing in and out of markets, in and out of. And see, I'm a big guy on rotation. I think bull markets are made up of rotation. I look at it as kind of like a V8 engine. As long as a couple cylinders are firing, we're going to keep moving. And that's kind of
I don't know anything about cars, but that sounds good. That sounds good.
But from that standpoint, that's what's happening. And those thrusts are basically saying something new has started. Sure, we're in a seasonal drought period between now and mid-March. It would make all the sense in the world to move sideways, maybe even a little further down. But so far, it's just been sideways.
At the index level.
At the index level, absolutely. But that's always how it is once you dig down, you're always going to see deeper waves and all that. I hear about the Magnificent Seven having all the returns, and they do make up X% of the returns when you're just looking at them versus the major returns. What people miss is there's another 10 to 15% of the stocks in there that are killing it. And there's 10 to 15% of the stocks in there that are offsetting that by killing themselves.
Yeah.
So there's so many more than those seven that are working all the time. So as long as you know kind of where to move from sector to sector as that rotation's happening, hopefully early. It's one of the reasons I mainly use a 3-month relative strength and not a 12-month, is because I want to see this stuff early so I can kind of feel it out as we're going.
Tommy, I love what you're saying. I literally agree with every word that just came out of your mouth. Which rarely happens, by the way.
Am I doing something wrong?
I think so. I think we're both wrong then. I every word you said, but I want to focus on one part in particular, and that's the sector rotation, right? So the way I learned it, clearly so did you, is that sector rotation is the lifeblood of a bull market. So let's rewind, because you went over a lot of years and a lot of dates, and I could follow you because I have like the charts in my head. But let's slow it down for 1 second. So the sector rotation, off the initial low in the summer of 22, when the new lows list peaked, a lot of things were working in the back half of 22, particularly consumer discretionary, industrials, and you really saw it on an equally weighted basis, which you alluded to before. It stood out even more so on an equally weighted basis. What was not working was large cap growth, right? That's why people thought we were still in a bear market in the back half of 22. And then to your point, you got the sector rotation in January. Like in the first week, it all came in. Large cap growth, tech, anything with super high short interest got squeezed, right? And then what was being left behind? The initial leaders, like the industrials and things like that. And what happened? You got that move higher into the summer, right? And then the third quarter correction that you described, when small caps were, very vulnerable to break, and they were the only ones not working, sector rotation comes in and you get the squeeze in small caps and everything's working. And
But I'll push back there. Actually, they were not the only ones not working at the end of 23. Everything had started to kind of follow them. They were leading down. But all the S&P, the Qs, and all
small
those
cap, but small cap industrial, small cap tech, and small cap discretionaries were doing great. What was holding down the Russell 2000 is that it's loaded up in biotechs and banks, right?
Yeah,
so let's remember that at the end of the day, you got rotation. I agree with you. My question now is, what is the next rotation, right? Like the seasonal weakness that you described into mid-March, like we've talked about, like I envision myself buying weakness around St. Patrick's Day, like we're kind of like joking like that, but like joking, but kind of serious, is kind of how I see it. What's that? Where's that rotation? Is it like financials? Is it more into healthcare? Because we have seen rotation into that. Like, how are you thinking? How are you thinking about it?
Well, it depends on who you are as the trader.
Yeah.
If you're a swing trader, if you're a position trader, if you are, whatever. But really, the longer term rotations I think that are coming in is that healthcare one's a big one because they were underperforming for a couple of years, especially biotechnology.
Yeah.
And that has changed on every single level. The breadth in biotechnology in my index was 230 names in it. And the breadth in there is like 70% of them are above their moving averages. That is monstrous when it comes to a very, very volatile sector like that, and it's holding up well. Yeah, they pulled back, but again, of the run we saw, the velocity we saw off the November move, they have not given up much at all. And you're right, that is a little bit of what's holding down the IWM is some of those. But again, Karlitz, or I guess it's Ermin Carmel on if you follow him on Twitter, he does a lot of great work showing that you really can't expect small caps to outperform in the broad markets overall. The reason I still use them and still leave them in mind is because when you see big swaths, 60, 70, 80% of an industry moving over these breadth measures, then it doesn't matter. You don't have to invest in the small caps, but if they're all participating, then there is a lot of interest in that area.
Yeah, but
and
Tommy, there's a time and a place for everything. Like small caps have been underperforming for 14, 15 years or whatever. So there's a little bit of a recency bias, but the decade prior to that, small caps outperformed.
Well, they did, but it was more small cap value than it was growth. If you separate them, and that's again a little more of the guys that kind of just plot around there and have good growth and all that. When I really look at the markets,
it's a fair point. But that was the leadership group that decade. Correct. Was value in general. So.
And I will expect some more leadership from small caps from here because of the confidence broadening out in the institutions.
Which small caps? Which sectors?
But again, I think that's going to follow the sectors that have the biggest strength. I mean, most of the earnings are still coming from technology. So if you think you're going to avoid that and say, okay, that's ran too hard, we now need to move on, that's crazy. Most of the earnings are still there. So the small ones can, in a broad or a good economy, which we do have underneath the surface, the small caps are going to start performing a little bit, especially if they can get access to capital.
So if you're talking about small cap tech just yesterday hit new multi-year relative lows, right? Is that more of a denominator fallacy because the SPY is so strong, more so than a small cap tech weakening?
I think it's a little combination of both. As I was about to say a second ago, is I kind of look at the markets as a big S curve. Now look at it this way. Small caps are always going to be trouble, even though they should be. The gap that's there between small and large historically should close sometime in the next, 1 to 3 years.
It's pretty wide,
but that's a long time to try to do anything. You can't really factor on that. But on the other side of it is I kind of look at it as an S curve to where I actually prefer mid caps a lot better. Yes. Because I figure small caps are the guys to where a good portion of them are still going to be a trouble, especially when they tighten down lending. So if that loosens up, that should help small caps. But while it's tight, they still have a problem. That's why they did well until the Fed started changing their tune early year. But on the other end of it, it's a scenario to where once they get past that level and they bounce up into mid caps, that's when you really start getting the meat of that S curve. And that's where you find your really great names and your real key movers. And then once they get up to large, right now we're seeing mega caps move like a banshee. But we all know that's not something that's all that normal. Now, I think there's a theory behind that as to why that's happening, and that's a different discussion because it takes a few minutes. But I do think for a while we might have that gap between large and small stay just because of the access that large has over small in this particular, let's say, elite-driven economy.
I love what you said about mid caps. I'm agreeing with you way too much, Tommy. Tommy, the mid caps. Ed Clissold, Ed Clissold over at Ned Davis.
Yes.
Does great work. One of the stats he came up was like over the last 40, 50 years, if you look at the, year by year, the worst performing groups, small caps, mid caps, and large caps, mid caps have only been the worst performer like twice. So it's like if rule number one is don't lose money, then mid caps are a pretty good way to accomplish that goal. I thought that was like pretty clever.
Absolutely.
Yeah.
And again, but you got to know where all the participation is. Go ahead, Spencer. I don't want to interrupt you.
No, I want you to bring up your charts though,
Sure,
because
sure. I'd
you
love
have
to.
all these scan. You
We'll
have
go
all
ahead and
these
bring up the
scans
screen, and then I'll talk through it. And again, I'll stay as long as you guys will let me, because I can talk about this
Oh,
stuff
this is
forever.
great. We could do this all day.
Can you just zoom in on this though?
But
Maybe
I
a little
built.
bigger?
Oh, can I? Let me see. Yeah,
Yeah.
give me just a
Yeah.
sec.
Just control.
While
plus
I'm
or
doing it,
something.
I'll tell you. I basically built this. This is a website I built that basically breaks down the markets into equal weight, then to sectors, and then to my own subsectors, because S&B GICs are a waste of time when you have 4 names in there. You don't do breadth on 4 names.
Yeah.
But the key behind my
keep
work
going.
is four situations of relative strength: relative momentum through RSI, and using range rules, not oversold, oversold. I'm sorry. And then you have relative strength. That's an internal relative strength you're seeing right here that ranks them against each other from 100 to 0. As I said, I weigh mainly on the 3-month relative strength, but I also have a 6 and 12 month here. If you're a longer term kind of guy, you can just hit the button and it'll flip the chart over.
Can you just zoom in a few more times?
A few more times. Okay, I'm sorry.
Yeah.
And then so basically what this does is this continues to break down the markets on my own. The index, this is not one you follow as an index forever, because it changes every single day. I do a filter every day. It's got to be within, excuse me, over $5 a share. It's got to be over 50,000 shares a day, and it's got to be over $100 million. But that can change daily. So don't look at this as a long-term index. Look at this as where things are flowing and moving now. But this breaks it down into these indexes, and then I broke my own subsectors down, which we'll see in a second. And it ranks them every single day based on a 3-month relative strength that's a front-weighted weighting. It's all price-based. There's no other derivatives in there. It's just basically the last 3 months broke up into quartiles and weighted the way I like it. I did this back in 2003, 2004 with old Metastock software, and I learned to really use it for a rock star. And the software went away, but this is something I really live on now. Well, breaking it into these subsectors next, which I've actually filtered this one. Let's unfilter it. It basically lets me every single day. I used to have to do all this by hand, so I only did it once a week. But now every day this website updates all this and tells me, what subsectors are moving. The relative strength gives me who's the best. Biotechnology is still up there. And then I can click right on that tab. It's going to take me to that page. And what you'll see is every page looks exactly the same, meaning it has an RSI chart on top with the relative strength scores up here. I know these are kind of big now to get them all on. Then below it, we have the breadth for the entire sector or subsector. Then below that, we have the relative comparative charts versus the universe versus its own sector versus S&P, the Qs, so we can see what its relative performance is. And then here you have the number of new 10-day highs or percentage of new 10-day highs, 21-day highs, 63-day highs, and lows of that particular subsector. So that runs every single night and lets me know where money is flowing within these markets, and allows me to move from sector to sector. And then once I do, to pull down to the bottom, every single one has its own relative strength rankings from every security in that sector only. So it kind of gives me a way to break down markets really quick, get to fast way to see where the holdings are. This is a subsector, so I only have stocks, but on every sector page, I also have the ETFs ranked. Every sector with every sector ETF in there is ranked, and it gives you a good quick view. I think I had industrials in here somewhere. It gives you a good quick view of kind of what's going on behind the scenes in every particular market. And it gives you that ability to pretty much go through and find where you want your fishing lanes to be, for lack of a better way to put it.
That's cool. I like that. Would you agree that while the largest components in something like the S&P 500 is technology and the Qs and all that stuff, and technology, fine. But it seems that the broad-based strength that we've seen in industrials, like for me, the generals of this bull market are the industrials, right? Would you agree with that?
They're taking back over. I do a weekly sector review and some other stuff. This is just something I've been putting together. And actually, you're right. That's what I highlighted this week, was that we looked last week, especially industrials have just been coming back on. They took a time off from mid-December, early December into late January, but they've been getting the most buying pressure over the last couple of weeks. This is from the weekend, so this is a few days old. Actually, I do this every day as well, and it gives me the new 10-day, 21, and 63-day percentage of highs in each subsector and sector. So it gives me a way to look in and see. Industrials have been the leader. I highlighted it actually in this particular writing this weekend, showing that, right here I have in the RS table up in my chart where my relative strength rankings are put. You can see it kind of took some time off here after leading last fall, and even leading some from a long-term perspective on the way down. Sure, it took a hit some in the RSI, and this did as well. But from a market's perspective, that's kind of why you're calling it the generals, because it didn't get hit as hard.
Yeah, and
but
then
on the
how much?
way back up, it never really got the outperformance again. But we're starting to see it head back up there now.
Yeah, how
So
much
I think
work are you doing at the industry group level? Because when I go through industrials and I go through all the industry groups, it's like the construction, the engineering, the truckers, it's like so many of the industry groups,
Well,
right?
that's funny you say that, because if you pull on down here, you get past the let me get to that actual page. I apologize for this.
That's all right.
When you
Stop
look at
agreeing
this
with
and you
me.
go,
Stop agreeing with me, Tommy.
when you go on my industrial page, and I'm just going to hit it here, we're just going to have to let it load. When you go on my industrial page and you pull down there, again, I'm very visual. I'm not real smart, so I have to see things, and I have a very short attention span. So I have to see things quick and understand them. And when I pull down on my industrial page down here past the breadth and all the relative strength stuff and all that, you get down to where the first RS chart or table you have is industrial subsectors. So I just put the industrial subsectors in here. I have a page for each one of them. Industrial goods, construction materials, machinery, transports, commercial and professional services, and aerospace and defense. They rank against each other. And then I can just pop right in here. Industrial goods is actually what I sent Spencer earlier some stuff on. Is it's the leader in this area. And it may not be the area where you're going to find all the best holdings, but look at to buy right this second. But overall, as an equal weight sector, look at this chart. That's beautiful. And one thing I note a lot about that people miss with RSI is, obviously I use range rules from 40 to 80 or bull ranges, from 60 to 20 or bear ranges. But one thing people miss a lot of times is like right back here where I'm highlighting on the backside. I don't know if y'all can see this, but on this right here on the backside of this chart, where the RSI just kind of bounces around back and forth between, say, late 50s to mid 70s. I call that a mushy trend. And when you get those mushy trends, sometimes you get your biggest strong up moves. This week I've been ranting about don't run away from an overbought RSI, but also don't want to run away from one that just keeps mushing sideways if the trend keeps moving higher. Because sometimes
especially if it's in that bullish zone like this one is.
Absolutely. It's sometimes they will grind so far and you think they're about to roll over and they just keep moving. But on this particular industrial goods chart, again, we go down here and quickly look at it versus all the other indexes I follow. Every one of them's turned up. Heck, it's even industrial goods even outperforming for the last couple of weeks the QQQ.
Yeah, that's hard to do, Tommy. Right? Not easy.
So then you just come down here and then you can look at all the holdings in it. You can rank them by who performed the best yesterday. You can continue to manipulate this into what you're looking for to find your strength. And then, of course, the final arbiter is always the chart. Always the chart. The final arbiter is not this table right here. This is what just leads you to the fishing lane. And the chart is where you decide whether it's ready to buy or not.
I know you're formally trained in a lot of ways that we are. I'm wondering how much intermarket work you do to complement, the great top-down equity work that you just displayed. How much do you incorporate interest rates and Forex markets and stuff like that?
Well, I have a couple of things to where I have a relative strength list of currencies, but I don't follow them a lot because I think right now there's still so much here in the US. I don't have to go outside too much. And then the other side I'd say is that on the macro page, that even once this is going to be a membership service for professionals, for RIAs, because I think way too many of them charge fees and don't do anything. So I think they need to learn a little bit more about the markets and start actually helping their clients manage through some of these things. But when you come down here on this macro page, I have world ETFs here ranked. So I do take a look at that. I see where we are. I see what other opportunities. Argentina ones obviously was one that came up probably about a month and a half ago. But here I do the intermarket rankings from John Murphy's books, to where what I do is again, if we're going to look at relative comparative charts, why not just put them all in their own relative strength list and rank them against each other? So then, over the last 3 months, here's what's outperforming this. This is, you have junk bonds in here. You have regular bonds. You have gold. You USO. So everything pretty much coming from his book, because that's where I took it from, the original John Murphy Intermarket Analysis book.
Me too, Tommy. Me too.
I tried to put as many of them in there I can as in one rankings list, because I'm kind of the opinion that you can do almost all your economic analysis in tables and charts. And so I think I can get a full macro view just by looking at some of these different things. The next thing I'd look at is size and style. So I have large cap growth, large cap value, small cap growth, small cap, all this in one RS ranking list. So every day I can see who's winning. Right now, it's basically a large to small, growth to value game. It's that easy. If you look at this really quickly every day, you can see, okay, here's where we're favoring. And then over here on the right, this second to last is RS movers. It's anybody that's moved more than 20 RS points in the last 5 days. That just kind of tells you, okay, here's what's moving inside any list you're looking at of mine.
This is fantastic. I love how fancy this is. So fancy. So what do you think? So you mentioned that you could totally see a normal seasonal correction continue here into March, right? No arguments there. I love the idea of having a shopping list where come St. Patrick's Day, if that correction does continue into that and sentiment sort of shifts, right? We want to be buying and accumulating. I'm building my shopping list. What do you like buying in that March lull? Well,
the idea that we're going to say that now without looking at the data every day between now and then is tough.
It's tough. That's why I'm asking.
I think at this point, because you got to look at who's not pulling back as much. Yep. I mean, healthcare is not pulling back as much. Industrials are starting to wake up now. The other thing you got to be real careful of is your true leaders are going to start moving 2 to 3 weeks before that March 17th.
Yeah.
Because they're going to set up now.
You'll see higher lows versus
Yeah,
maybe
they're
lower
going to
lows
start
in
already
other
playing
areas.
out. They're going to start tightening up. They're going to start seeing their breakouts hold a couple weeks before, and that almost always happens. So again, making your list now. But again, one of the biggest things to me that's more important than anything else, if you're going to be a market person, is just paying attention. You know, it's something between now and March, we got to watch every day and see where that money flows in and out of and all that and make a decision. People say, well, wait, with all this, are you a day trader? No, I'm not a day trader, but you've got to know what's happening daily to be able to build that confidence to continue to work through holdings and positions. I've managed money in my own RIA now for 20 plus years. I've been in the business 30 years. I'm old. But this is something I realize institutions have no care at all whether our clients make any money at all. So I feel I needed to build me a system that I could do it on my own. And I feel this is something that's easy enough for an RIA or someone that's working with clients to use and keep it real simple. And basically, if there's one thing you can explain to clients, because that's what they always want to do, it's strength and weakness. So don't complicate things. Don't make it real hard. I don't want all that extra stuff to get in there and keep them from doing anything.
Two quick things before we let Tommy go, because I know the fun police is here. Two quick things you said.
Market's about to open.
Two quick things that you said there. First of all, watching the relative strength during a correction, the market tips its hand, right? So what Tommy was just saying, like, look out for that. Tough to know where the relative strength is going to be today. We got to watch it between now and then, number one. And number two, the following every day, I know you kind of just said that quickly. The following every day, if you recall, Tommy, there are people that are actually older than you that used to do this by hand every day. And if you talk to those people, Luis Yamada, Ralph, et cetera, they'll tell you how valuable the actual process of that daily entry was to get a feel for the market. And while we might not be writing something on the wall, what you just said is essentially the modern version of that, is it not?
Absolutely. My mentor per se was for RSI was Andrew Cardwell before he passed a year or two ago.
Yeah, rest in peace, man.
He was awesome. He talked a lot and he loved his stories, but he was great with RSI with that kind of particular. He did everything by hand, did all his charts by hand until probably a year and a half before he died. Finally went on a computer. But it's not really the same unless you really are paying attention every day. This is a lot of work to kind of go through some of these things until you learn the flow of a system like mine. But at the same time, once you learn the flow of it, it's very visual and it basically keeps you in the right areas and at least lets you know, gives you some warning signs when things are changing. And that's really all anybody can do. Any trade, I believe, whether you're a short-term or long-term trader, you have to own that trade. I can't tell you this is a great chart to trade it. you got to have a reason to own it. I can give you good setups, but you got to really look at it and buy into it for it to work. Because if not, you're going to panic out on it on the first dip.
Sure. I love it. Tommy, I loved everything except that we agreed way too much. Everything was great. I appreciate you being here.
Great stuff. I did drop the link in the chat, and I'll throw it on the screen as well. A few people asked about Tommy's site, so there it is. Tommy, always a pleasure, man. Great stuff.
Thank you.
Thank you, guys. I really appreciate it. I'd love to come back anytime y'all want to chat.
All right.
Oh, yeah.
Thanks.
Come back tomorrow. That was great, dude. How good was that?
Yeah. Well, last time Tommy was on, you were out. You may have been in Disney actually, so it was just Strazza.
I was doing a little channel checking at Disney. Seems like I did a pretty damn good job, huh?
Sure, whatever. And Steve said the same thing. So yeah, we'd love to have Tommy back. Chat loving his Lowe's charts as well. Okay, it is 9:32 now. Markets are open, and we are
do the rundown.
Officially,
Dow futures up 60 points this morning. S&P futures down, basically flat. NASDAQ 100 futures flat. Bond futures getting the crap kicked out of them, down 70 basis points on the 30-year. Silver up 1%. Copper down 1%. Gold flat. Oil up 2%. As we're seeing that negative correlation there, it's really, really interesting to me. And the dollar up, with the VIX back at 13 and U.S. 10-year yield hanging out right above 4.1%.
Do the funny money.
Funny money is Bitcoin right around 45,000. Very impressive as it continues to consolidate below that 47,000 sideways versus to the downside. Ethereum holding in there 2,400, pretty much flat on the day. And of course, the old Solana holding above 100. Strazza, that's a big deal, I think. 104, up 2.7% on the day. Total crypto market cap pushing 1.7 trillion.
New all-time highs for the Celestia.
it was funny while it lasted in China, right? That was a fun 2-day move.
Yeah.
China down 1.4% today on the FXI. K-Web down 50 basis points, and Chinese technology CQQQ up on the day.
We didn't talk about the Baba yesterday, did we?
We did not talk about Baba.
Baba.
Correct.
So they liked it, and then they decided they didn't like it. It was, right? Whole thing.
Well,
initial reaction up, and just absolutely pounded.
I've been toying with the long China, short US situation. I can't get myself to pull the trigger. I'm just short US.
Yeah.
But I got a text message from my dad the other day, Strazza, like 2 or 3 nights ago. My dad's like, "What's up with the Chinese stock market?" My dad has never once asked me about any stock market, yet alone the Chinese one.
Lot of headlines.
I didn't know my dad knew that China had a stock market.
Did you ask why, Dad?
No, because I can't lose the data. I need him to think that, I need to just play it cool.
Okay.
Lot of headlines over the weekend.
Like my grandmother. I can't tell my grandmother she's the greatest contrarian indicator of all time, because then I lose the data. So I'm just like, all right, abuela. Yeah.
So I'm in the TME, and I actually I got out of the towel recently, got back into the towel 2 days ago, Tuesday, right before the close. Nice move here today. I was just looking for vehicles. So those are really my 2 favorites, I guess.
I'm not convinced on the TME yet. I want to see double digits. I want to see it.
Listen, this is not a decisive resolution.
No.
This is the opposite.
It's quite the shady one, actually.
Yeah. So we'll see. Tal, nice move today, though. Is this an earnings thing, or these stocks just run sometimes?
Probably maybe both.
No, we had earnings behind us.
It's not an earnings thing.
They're all ripping. Look at the New Oriental too. Wow. Okay.
Oh gosh, yeah. That's what these things do.
Look.
What they do.
Oh god, I don't know if we could talk about it on here.
What's the over?
Yeah, we could. Oh, I got a good one. I got to mark up a chart.
I want to know what the over under is going to be for the futures open on Sunday during the Super Bowl.
What does the Super Bowl have to do with it, though?
I think that I said it this weekend. I think that we're going to have some turmoil in markets during the Super Bowl.
Why?
Because I could smell it.
What are you talking about? You
I
sound
got
like
a few more gray
physicist.
hairs than you do. I could smell it. I could smell it coming.
This is a conspiracy
What?
theorist thing to say.
100%. Totally.
This is-
It is. I agree. I'm saying it anyway. Just telling you how I feel. Listen,
Is this
nobody ever accused me of not saying what I'm thinking. Right? Right,
this-
Spencer?
Is this from Perlman?
What? Perlman doesn't talk about Sunday futures. That's not a Perlman thing.
Okay. Well, he's had some interesting ideas this year about Chinese stock market and the Chinese.
Yeah, but that's just him messing around. He's not. I guarantee you, he has not bought a.
No, he
Chinese
has.
ETF.
No, he is definitely.
He's like, oh, the year of the dragon. He's just being silly. Yeah.
All right.
Yeah. Hey, so we are not yet officially at S&P 5,000. We're damn close though.
We didn't
I
gap.
wanted to
We
read a
didn't
couple
gap right
stats.
through it on the open.
S&P futures
Yeah.
are there, so that's good enough for me.
enough
We
for you?
were
All
talking about that this morning. I
Well,
want
the
to.
S&P
All right.
futures is above 5,000, but the cash isn't.
Yes.
That's a W. That's a 5,000 in my book.
Let's all hashtag SPX 5K on all our tweets today for extra engagement.
I'm gonna hashtag S&P 4K.
Okay. So some fun facts about the S&P. And nice round.
Yeah, I
numbers.
like this.
It took the S&P 500 41 years from its birth in 1957 all the way to 1998 to get to 1,000. It took 41 years. To go from 1 to 2,000 took 16 years. 2014.
Wow.
To go from 2 to 3,000, it took 5 years. 2019. To go from 3 to 4,000, it took 2 years. That was a fun time. 2021. And then it's been 3 years since we hit 4,000.
Okay.
So the question
3
is,
years.
Yeah,
Since we hit 4,000. Sorry. Yeah.
Give it to us, Spencer.
when 6,000? I'm
So
going to drop a poll in the chat.
we're already up here 12.5% on the year, right?
In the
And-
S&P, S&P's up. No. What are you talking about? No, that's not right.
Oh
4%.
shit! I'm looking at
4%.
Shopify. Sorry. Sorry.
Big difference. I'm like 12%. I counted
all
4%.
5%. So we went back just through recent history, just looking at the yearly candlesticks. When the S&P 500 is up in a year, it tends to be up 20% or more in a year, right? The average is never the case.
It's
never.
never 8% or 10%.
So
Like it's never even happened.
So we need another 20% to get to 6. I wouldn't be shocked if we look back at the end of this year and say S&P did 25% and gets us there. I really wouldn't. I think it could happen Christmas. Santa
Christmas
Claus
this year.
Santa Claus rally 2024, yeah.
S&P 6,000 Christmas of this year. It wouldn't be, honestly, it would make sense, bullish election year. You get that rally into the end of the year. It would make perfect sense. Those breath thrusts that we saw in December, again, that's indicative of exactly that. Like maybe it doesn't actually hit 6,000. Maybe it goes to 5,800 or 50, right? But the point is, like, there's a really high likelihood based on an overwhelming amount of evidence that we at least flirt with it, right?
It wouldn't surprise us, right?
Based on the overwhelming data, it would be, I would argue it is a lower probability of it not happening, right?
Well, I was
Do you
going to
agree
put,
with
I was going to put a poll in the
I
chat,
think
but I
so.
didn't have 2024 as an option. You want me to add 2024 as an option in my poll?
Yes.
Yeah, dude.
All right, shoot.
What are you talking about?
Of course. Come on, Spencer. It's a bull market.
All right, give me a second to adjust my poll.
Where you been, Spencer? Just because
I
we're
don't know.
short the market doesn't mean that we're not going to go higher after.
The NASDAQ did 54% last year. If the S&P does half of that this year, we're there.
Dude, 54% on the Qs. I think we're up 75% on the Qs off the lows.
It's monster.
I love how everybody in the chat's asking for the rug pull. You're already seeing it at the stock level, guys. Come on, pay attention. Go count.
Wow, what a move from this monolithic power today.
Are we bringing on Sean? Can we bring on Sean?
Yeah, we got Sean here. Sorry.
Oh, bring him on because I know he's going to love this chart. We're going to talk about a Chinese setup that I'm getting involved in here today.
Wait, let me make sure. Let me make sure Sean's ready. Sean, you ready? Camera on? Okay, good. Bring Sean on. If I can find my.
Let's
Sean
do
button.
it.
There it is.
Johnny baby.
What is up, boys?
Dude, Baltimore, man.
Hey.
I freaking love Baltimore.
I
I'm
had a
so
great time in
bulled
Baltimore
up.
last year.
Dude, I'm so bulled up on Baltimore. We
Went to
should
a
do a portfolio accelerator in Baltimore.
I went to a football game in Baltimore
Four
last year in a
seasons.
sideways rainstorm, and I still had a great time.
Dude, every time I'm in, dude, last time I was in Chicago, it was a beautiful day. I was in Baltimore yesterday, beautiful day. Like, I'm getting real lucky these days.
So JC, I got some bad news for you. I'm an old school trader, right? I started trading in the late 1990s, and when I started trading, we had a keyboard, right? We didn't click with a mouse and do all that stuff. We had hotkeys on our keyboards, right?
By the way, we still have those.
No, I know, but nobody trades with hotkeys on their keyboards anymore. Is where I'm going with this. But anyway, back in the day, we had a phrase. My selling thumb and my buying thumb, because that's where it aligned with the keys on the keyboard. And people would say, "Oh, my buying thumb got a workout today," right? Like that was a phrase that people said in my office. Well, my selling thumb is injured. I went skiing a couple days ago, and I had a bad fall, and I sprained both of my thumbs. But this thumb in particular is really out of commission. And this is my selling thumb, JC. So I don't know if I could get too bearish here because my selling thumb doesn't work.
Good. Because everything we keep shorting keeps working for the
did
most
anyone
part.
just see that? Did anyone just see that?
See what?
Sean, hold your thumbs up again.
Whoa, does that happen when I do that?
What?
How come mine doesn't do that?
I don't know.
Is this thing on?
There we go.
Is this thing on?
It's
No,
it's a Zoom setting, which I don't even know how to turn on or off, but there's a Zoom setting, and that's
'Cause
happened to me before.
Oh, he's a guest. That's why he's using Zoom. Or not.
No,
I'm not
he
using
had-
Zoom.
he probably has Zoom.
I'm in
No,
Restream.
do you have
but
Zoom
anyway.
open right now? You have Zoom open right now, Sean, right?
No, I don't think so.
All right, can we
all
get
right,
back
I
to the
don't know.
market?
All right.
Nobody cares about your thumbs or your bad skiing.
thumbs are cool.
So yesterday we shorted a home builder and a coal stock, both of which are working, by the way. Strazza was offended that by the way, we were thinking about shorting uranium, but we shorted coal instead.
What?
Strazza would have been even more offended had we shorted the uranium. How do you feel about that, Strazza? See what
Strazza's
happens when you miss a
pissed.
meeting?
What's the saying? The inmates are running the asylum. What is that? I missed one meeting. I yelled at the guys. I was like, "Do any of you, like anybody here, any balls at
Dude,
all?
we
Shorting coal stocks?
We should have shorted uranium stocks too. We can still do it today.
Well,
Ian was
Strazza, if
like-
it makes you feel any better, I
Ian was like,
did not
"Strazza, I
short the
talked
coal
about
stock just
uranium."
yet.
I was like, "Thank God."
I
Well,
like the uranium short and the coal short.
Yeah, go for it.
I
I got
did.
stopped out of console CIX. What
You
what are
got stopped
saying,
out
Sean? Yeah,
of a long.
yeah.
And
Yeah.
the reason, this is just math. I'm not a math major, but the reason he got stopped out of his long position is because the stock was going down.
Well, yeah, and that's
There's
a
a
nice
lot. There's a lot of that these days. I don't know if you guys have counted.
nice little short-term top there in the CEIX.
I think you short the shit out of coal. I mean, we're not short uranium, but I really like that uranium short. We're looking for longs on the oil and gas side, like the old flipperoo, little flipperoo there, Shotty baby. You know.
Well, Strazza, this will make you feel better. I did not short the arch just yet.
I mean, look, the setup is there, but
It is
probably
there.
it's probably just a false start. Like, yeah, got to keep it
Yeah.
tight.
Or a nice little rug pull with the bonds, getting the shit kicked out of him.
Somebody
Stocks
needs to
look
tell
so
Uber
good.
about this rug pull because Uber is ripping higher again.
They're all working.
Good.
They're all working.
Is Uber's a software stock or a transportation stock? Have we figured that out yet?
It's both,
Software
dude.
stock, right?
Both.
No, I know. But it sure as hell trades like an industrial, doesn't it?
Transportation?
It trades like a large cap software stock, really. But
Yeah,
it's
but industrial
multiple-
stocks are trading like large cap software stocks.
from a valuation perspective, it's not priced the same way as the software stock. So that's kind of like the bull argument right now. Is really just multiple expansion because their business is just booming.
All right, let's talk about what everyone's been talking about on the old social medias and here in our own chat.
What are they talking about?
The Putin
The
interview?
divergence, the real divergence is happening between Steve Strazza and JC Parets.
Let's
Let's talk about
versus
what's
this?
happening here in the market. We got
Because
some of
us take the time to count, and the other one doesn't.
We've got one guy who's all bulled up. We got another guy who's wearing his bear pants. They look like Miami Zubaz pants, by the way.
Damn, I look that good?
No. So look, I want to weigh in here because I mentioned this last week. I'm a little bit more Switzerland on this, right? Like, I see both of your points. Strazza is making great points. JC is making great points. Now, we, over the last week, at least in the options area here at All Star Charts, we've been putting on some more bearish bets. Now, I want to make it clear to people that I'm not putting bearish bets on because I'm betting on the market collapsing here. I'm not saying we're heading into some crazy bear market, and I'm not calling the top of all tops in stocks. That's not what we're doing. At least for me, what I agree
with that.
What I'm doing is I'm looking at my portfolio and I've got a shit ton of long positions on, right? And they're all working, which is great.
Yep.
But if we are going to pause here, or if we are going to have a little bit of a sell-off, I want something to help smooth out that return a little bit for me. So I'm on the hunt for stocks that, look vulnerable in a sell-off. Now, JC, I take issue with some of the stocks that you want to sell. You're trying to fade stocks that are still strong. And I'm like, no. You missed that, Strazza. I was pushing back on some of that. I want to sell the stocks that have already peaked, maybe a few weeks ago, a month ago, looking like they're vulnerable. Those are the stocks I want to sell.
I want to make a point here. Can I make a point?
Yes.
I like what Sean is doing here. Is sort of putting things in perspective. I talked to a lot of portfolio managers and traders at hedge funds and things like that, and exactly what Sean said is exactly right. And a lot of these guys are, and it's mostly guys. A lot of these guys, it's all guys, are doing all different things, right? Some are doing exactly what Sean is doing. He's got all these longs, looking for a hedge, looking for cheap insurance because the insurance is literally so cheap. So you're getting cheap insurance as opposed to buy the insurance after the storm comes. So some people are doing that. Some people, like me, are net short, betting directionally on the rug pull. And there's a lot of people somewhere in the middle, right? And I think that it's important to remember that everybody, including in this particular quad session between the four of us, all have different objectives, all have different time horizons. Even if the four of us agree on a trade, the four of us might do it in four different ways, right?
Usually.
Probably will, actually.
Usually.
So I think it's important to remember that what JC's doing or what Sean's doing is you don't have to do those things. Like, you do what's best for you. And what's great is that none of us care what you do, right? So do what's best for you and your family,
I would like to also point out that had I not already been in a bunch of long positions right now, let's say I'm coming in and I've got no positions on, right?
You wouldn't be putting on shorts.
I would not be getting aggressively short here. I would probably, if anything, I'd be looking to put on a little bit more delta neutral trades. That's
I know, but I've been thinking about that too, but you're not getting paid to.
I know. So it's a tricky spot, and so again,
that's why I don't like that trade. I don't like the delta neutral trade here.
No, I
like what you said the other day, Sean. I like what you said that a few weeks from now, maybe a month from now, looking to put trades like that on. That I like, but not right now.
No, you're right. It's a tricky place. Those are the trades I would like to put on. Doesn't mean I can put them on, right? What I want and what I need are two different things.
That's true. That's true.
And like the beauty of it too, and a lot of times we're just having a good time on here.
I want the chocolate cake. I need the broccoli.
We do genuinely disagree, but there's a good chance we both end up being right. We're talking about execution and more or less how you navigate a corrective wave. Pat called me yesterday. He was laughing. I guess he just watched like a clip from the show yesterday or the day before. And he's like, you guys are just disagreeing over time frame. And I'm like, I understand. It was pretty much spot on. I don't know. I like to wear my bull market shirt and maybe do a little extra golfing during a corrective wave. And
I heard JC say earlier that he doesn't care if we go to S&P 6,000 or S&P 0 or something to that effect. And I know where he's coming from. I know where he's coming from when he says that. But in the reality, we all want S&P 10,000, right? It's good for
No,
all of
I
us. It's good
don't.
for
No.
the economy. It's good for our business. It's good for trading. It's good for
Hell
everybody.
no.
Thank
I
you,
want
Sean.
it to get destroyed so I can buy it on the cheap.
Sean is so right.
Now I'll
dude.
take the other side of that. First of all, none of us can control what the market's going to happen, so it doesn't even matter. But gun to my head, if I had to pick one, S&P 10,000 or S&P 1,000, I'll take the 1,000 all day.
You miserable bastard. You don't mean
I
that.
am a miserable bastard.
No.
What's best for me and my family, which is the only people who matter right now. What's best for me and my family? S&P 1,000. Give it to me.
Imagine being like living in Japan and your 401k being in Japanese equities since the 80s. You don't want that. Don't say that. That's
all
not
right.
true.
It's how I feel. You don't have to like it. That's how I feel.
I don't believe you.
It doesn't matter.
Yeah, what about after?
I have no control over it, and I'm not actually going to short the market with a target of 1,000. So it doesn't even matter what I want.
What do they call people who are? What do they call people who are big lovers of Atlas Shrugged and Ayn Rand? That's what JC sounds like here.
What is best for JC and JC's family? It's for me to put all my money to work at S&P 1,000. That would be the best thing for me and my family. Now, what's best for me and my family? The market doesn't give a damn, right? The market's going to do what the market's going to do. But if I had to tell you which I prefer, it's that one. Sorry, not sorry.
He is an Ayn Rand guy, huh? He really is.
Who is this Ayn Rand fellow?
I don't know if I'd go that far. Checking in on our YouTube poll. When S&P 6,000 is the question, 2024, 25, 26, or after 26. 44% saying 2025, next year, for S&P 6,000.
It's the easy answer.
45% saying next year.
It's an easy answer.
I like it. Can we throw up the go-to? I know Sean likes these setups. Let's see if I can get you guys to get long one with me here.
Ooh.
Go-to meeting?
So I've been stopped out of this one at least twice since last year.
At least twice.
At least twice.
And then what is this? Is some Vietnamese
No.
something?
Yeah.
This is the juicier version of Tau or EDU.
Got it. What country?
Why do you need
China.
a juicier
Yeah,
version
I was
of
going to
those?
say, doesn't he have enough juice in those others?
I'll take all the juice I could get. Y'all know me.
What is this?
Gaotu Tech.
Yeah.
It's a online education.
Oh, right. Online education from what country?
Is it China or is it a different country?
China.
China, Beijing. So
China.
Yeah, so they're definitely doing what they say they're doing.
Dude, whatever. It's about the group, right? Like, why wouldn't this home builder look like the other home builders? Why wouldn't this online education stock from China look like the other two online education stocks from China who have already either filled this gap or in the process still of filling this gap?
All right, Strazza, you know, I hate talking about stocks that are trading at $5 a share, but I'll play along here with you. I'll play along, and I'm looking at. Normally, I would say, Strazza, just buy the stock. It's like an option, right? Just buy the common.
Yeah, probably will.
But if you want to get crazy,
give me something crazy.
You want to take a flyer with some leverage.
There's no liquidity in that.
There's surprisingly, check this out. I'm looking at the January options. So almost a full year to expiration from now.
I'll be dead.
You could buy the 5 calls for about $1.50 right now. If you want to get crazy,
that's so good.
$1.50.
No.
So the $5 strike for $1.50, dude. If this gap closes, it closes quick. Sean, how about something like in July? How much
in
money can I save?
July, you could buy the 5 calls for about $1.
You might as well.
You might as well get the January.
You might as well pay the extra 50.
Is it a wide spread?
No, it's 130 bid, 160 offer in those January 5 calls.
Gross. No thanks. Gross.
No,
I'm with Chris
I'll
Dawson
bet you could
here.
get filled at $1.50.
I just want to give a shout out to Chris Dawson. Strazza's guilty pleasure is buying turds. Well
Dude,
said,
get out
Chris.
of here.
Well said.
Give me a break. This is the same guy who's brought you all of the most quality growth stocks over the past 2 years. But yeah,
the most quality growth stocks. Oh,
yeah, I would argue that's more Spencer's game.
Yeah, go tell Uber they're a turd.
Thanks, Sean.
I'm on Team Strazza. I like Strazza's. I mean, he's a little bit more YOLO than me, but otherwise, I like Strazza's vibe.
You used to be the conservative one, Sean. Remember?
I still am. I'm very conservative when I hear you getting all bull or bared up right now. I'm very conservative.
How often? Let me ask you guys this. Sean's known me longer than any of you guys. How long have you known me, Sean?
2008, 2009.
And how many times have I been this bearish and short over those years?
A million.
I mean, I remember one time, 2017. I remember
18.
you gave a presentation at a conference that I helped put on, and everyone was bullish, and you went out there and showed a whole bunch of charts that you were trying to convince a lot of minds, and nobody was budging. And but boy, like the next 3 weeks following that, we had a nice little swift little sell-off, and you were looking like a smart guy.
That was September. That was September of 2018, and you know why I know that? Because that's when I met Giancarlo.
Oh,
You're
Oh,
welcome.
it's like-
You're welcome. I introduced you to Giancarlo.
You did. You did. You did.
Oh, I did not know this.
Look
John
at Spencer.
Irish
There
Kevin.
was a whole world going on before Spencer arrived.
Jason,
Spencer hears
yeah,
all the backstories.
Speaking of quality growth stocks, can we bring up that ARM chart real fast?
What a monster, huh?
The guidance was through the roof here. Last
People were
night.
so unexcited about this IPO.
Wow.
Well, it's hard to get excited about the first names that get through the door.
Wow.
They usually get shot, right? So
It's a British semi, $115 billion British semi. Wow.
It's a SoftBank name.
So this chart doesn't obviously show today's candle, but you can see. I mean, just pull it up yourself.
It's
and
off
you can
that
see,
chart.
yeah, it's
Wow.
literally off of the chart. so there you go.
I know, but
Yeah.
is it because of the IPO and the IPO market is back? Is it because this company's so great, or is it because it's a semiconductor?
It's semiconductor.
Well, it looks like they just had their first earnings announcement. Yes.
It looks,
These
like they,
semiconduct-
it looks
yeah.
like they just
Yeah.
cured cancer. I mean, if you look at that 45% move today.
These semiconductors cannot be stopped.
Yeah. Look at Taiwan Semi.
That's the top.
Okay. Keep
Anyway.
dreaming, bruh. Let's talk about some crypto equities. All anybody wants to do is talk about these spot Bitcoin ETFs and even Bitcoin itself. If you want the juice, you know, we have two very proven vehicles at this point. I like Coinbase more, but you know I love that juice, so I'm involved in Mara as well. Mara on strength above 19 does not get cleaner. Coinbase.
No, but 19 is a little cute. Don't you want to see I want to see 22.
I jumped it last week. No, I don't want to miss it, right? Because if this thing, you blink, you do a morning show, and then you get back to your desk, it's at 10:50 or 20:50.
What's your level, Strazza? 19?
19, and here's why I think it's okay to get involved at 19. Look at what the cryptos are doing. Look at what Bitcoin's doing. If Bitcoin's going to, resolve this little consolidation that's been since December, make another leg up, you want to be in Mara. You want to be in Mara for that. And I think Coinbase against 115 is just a gift for a long-term crypto vehicle. That's your line now. So I think these are two very actionable setups. I like them both a lot. Like I said, preferred vehicles for investing in crypto via the equity market. This is it. Clean as hell. You don't like it?
No, I like it. I like it.
No, I need to see more.
You need to see more? Dude, you
Out
buy
of Mara.
Coinbase here. You buy Coinbase, you have a target at the old all-time highs. There's like a triple from here. And if you're wrong, you lose $5.
Yeah. I don't hate
That's
that.
not a good enough risk reward for you in a
No,
bull
I'm
market?
talking about the Mara. I like your coin idea better than the Mara.
Okay. But see, the thing about Mara, at least, it's I like the buying on strength entry in this environment, right? Where there's a lot of uncertainty about this correctiveness. So it's got to prove itself to us. If you want to, like you said, make it prove itself even more, use the AVWAP from the pivot highs, right? And strength above there. But no harm, no foul. If this thing rolls over here, you're not involved. It might be at 19 right now, actually, though. Oh, yeah.
Let's do some
1930. Let's go, baby.
Let's do some quick recess
Phew.
and hop out of here.
I got some recess.
Yeah, coin again, back to
Yes.
the well. I was on here, I was very loud about it. I sold like 5/6 of my position last year.
5/6.
5/6, literally. Yeah, I did the math for you and everything.
All right, I got some recess
I
for you guys.
got a pretty good recess. Ready? Good recess.
All right, you go.
So
You go.
Someone go.
my last kid started walking yesterday.
Nice.
Oh,
We had one walker of the twins, and now we got the other one.
Nice.
These kids, kids are a funny bunch. He definitely could have already walked. His brother was walking. He just didn't feel like it. And now he's walking and he's like all proud of himself,
Let the wrestling begin. Here comes the wrestling.
That was cool.
Yeah.
Awesome. Sean, what do you got?
All right. So I don't know if you guys have ever thrown a surprise party for anybody, but my wife had a big round number birthday this week. And I threw a surprise party for her this weekend. Got the whole town. We live in a small town, but we had the whole town come out. I had people flying in from the other side of the country, friends of hers she hasn't seen in years. One of them she hadn't seen in 20 years. It was a whirlwind week. It finally ended yesterday. The last person left, went to the airport yesterday. Boy, it was a wild time. Great success. I was worried that we were either she was either gonna love it or she's gonna end up in the hospital because she had a heart attack of being so surprised. But great success, and
awesome. Great.
It's a lot to put together.
I'm just very happy that it all worked out. It was causing me a lot of stress in the last few weeks.
Husband of the year.
Husband of the year.
I couldn't talk about it with you guys because my wife watches these things and she hears things that I say here in the house, so had to keep it real hush hush.
Larry says happy 80th to your wife.
Larry's making me laugh all morning out here.
He looks great for 80, I'll tell you.
All right. That'll be a wrap for us here. It is Thursday, which means we have Chart Request Live at 1 Options Jam session with Sean at noon. I almost said it with noon at Sean, but with Sean at noon. So that's the rundown. Thank you to Tommy Lackey. Thanks to all of you in the chat. You guys were hot today. You guys had jokes today. We appreciate that.
Yeah,
go make some money. We'll see you later.
Shout out Baltimore.
Let's rock and roll.
Great town.
I can't take no loss. I don't even know what it costs.